We have some breaking news right now coming from Berkshire Hathaway. The company has just filed a Form 4 and an 8K. And joining us to talk about those topics and his first letter to shareholders after taking the reins from Warren Buffett is Berkshire Hathaway's CEO, Greg Abel. Greg, welcome. It is great to see you this morning.
It's great to be here. Good morning, Becky. Morning, Joe.
Thank you for being here.
We really appreciate your coming on set. We have so much to talk about. But let's jump in with the news that is just crossing the wires, and that's what's coming from the 8K. That's the big headline here, that Berkshire Hathaway has begun repurchasing shares of the common stock under the previous policy that had been out there before. How many shares are you buying back? Why are we hearing about this?
Yes, so we've had a long-standing policy that when the intrinsic value, as we see it, and computed on a conservative basis, when it exceeds our market price, Berkshire has always acquired shares. That's been our long-standing policy. We highlighted that in the 10K and in my letter that remained in place, and we've just recommenced yesterday. So the point being, we see value, the intrinsic value exceeds the current market value, and we started recommence purchasing. And we felt it was important to communicate to our shareholders, our partners, our owners, that with the transition of leadership, and that this is the first time we're purchasing shares, it was important to let them know we've recommenced.
Yeah, the last time that you had bought back shares was May of 2024. Berkshire shareholders have long realized that it might be Charlie, maybe, or Warren talking to each other, kind of figuring what they thought was a fair value for the price of things. Did you talk to anybody about it, or you looked at it and you thought this is a good time to be buying back?
No, absolutely talked to Warren. So how I approached it was obviously looking at the value, having a view of intrinsic value, consulted with Warren relative to the value and the timing of, are we ready to recommence? And the thought there was, after the consultation, we filed our 10K. There's a 48-hour cooling off period, Monday and Tuesday, and we commenced purchasing on Wednesday morning.
Have you been looking at this for a long time?
We look at it continuously.
What are the three top things that would make you think that is something to the price of sales? Is it what jumps out as a signal that the intrinsic value is not recognized by the share price? Which thing?
What we always look at is what are the economic prospects of each of our companies in Berkshire. Mm-hmm. And we look at that over the long term.
Is it a gut feeling more than, are there numbers where you'd say, okay, this hit 80% of book, this part of Berkshire, or something like that? Nothing that specific.
It's really just looking at the economic opportunities that exist within Berkshire, and are we comfortable that the value proposition is very strong, and we're doing it on behalf of, obviously, our shareholders and owners. We have to view this as value, that we're creating value for our shareholders long term.
So if the stock goes up from the announcement or from the buybacks, how long would you do this? How much will you keep doing it until it remains the case that you feel it's undervalued? You can do as much as you want?
Correct. As long as our intrinsic value exceeds the market value, again, conservatively determined, we'll continue to repurchase. But the one thing we have never done is we don't disclose the amount, the timing, or the computation. But we did feel this time it was important because of the change in leadership that we should
not even
highlight.
A ballpark.
So we're not going to hear something like this from you again. We won't know when you're in the market buying back.
This is a one-time event to let our shareholders know.
And you won't say it's a $20 billion buyback and we're halfway through. We won't know anything.
Correct.
Is that a reasonable number? Could it be? It could be a lot more at Berkshire.
It's completely dependent upon the intrinsic value.
Okay.
And how that equation remains in place.
So Berkshire shares up until a minute ago were down maybe 1% over the last year. Market's been up. You guys have $373 billion in cash as of the last filing.
Correct.
I guess you're looking around and it tells you that this is something that makes way more sense to you than buying other things, other stocks, but making other purchases.
Exactly. We always look at effectively three buckets when we're allocating our capital. We have our existing businesses. Deploying capital back into those, both for their current operations and incremental opportunities. That really exists every day. And we're constantly challenging ourselves. Are we thinking about that properly? As you highlighted, Becky, there's also, do we acquire stock? And when we're looking at companies, do we acquire whole companies also? And then there's do we acquire equities, other equities? And as we've highlighted, we always look at that as very similarly to buying 100% or 2%. And then the third bucket where we deploy our capital is share repurchases. Each of those, with the amount of capital they have, can be done independently. So when we're purchasing our shares, it's not taking away from any of the other decisions.